What's up you guys, Sasha here. The ARK Innovation ETF, as well as some other ARK funds, has become incredibly popular over the last 12 months. Not least because it has grown by 30% per year since it was founded over 6 years ago, and it grew by a mighty 170% through 2020. The fund invests in growth and innovation kinds of stocks in various different sectors, including healthcare, communication, and IT infrastructure. The majority of the companies within the ARK Innovation ETF are large, with 45% having market caps of over 10 billion, and Tesla, after their meteoric rise through 2020, making up about 10% of the total fund. There are 51 different companies in the ARK Innovation ETF as of January 2021, but I wanted to talk about just 5 of them that I think have huge potential over the coming years. These 5 I am personally invested in, and I have been invested in them for some time, and I think they have still a long way to go. But just before we get into exactly what they are and why I am interested in them, I wanted to tell you that I am not interested in short-term gains. I don't invest for the short term, and I don't care what the share price is going to do tomorrow or what it's going to do in 1 week or 1 month's time or 2 months' time. I invest for the long term. I invest in the value that I see in the company and where it might be in 1 year, 2 year, or even longer timescales. Now, with that out of the way, let's talk about number 1 on my list. These come in no particular order, by the way, but the first one I want to talk about is Nintendo. Nintendo actually trades on the Tokyo Stock Exchange, but if you are based in the US, Europe, or other places, you can still invest in them through other kinds of instruments. If you're in the US, the most common way to invest is through the NT-DOI or the NT-DOF. These are American Depository Receipts. These are essentially papers issued by an American bank that represent the shares that are traded on an exchange elsewhere, in this case in Tokyo. Now, the difference between the two is very simple. The NT-DOI, the one that ARK Invest actually has holdings in, represents 1/8 of one of the shares over on the actual exchange, and the one ending in F represents one entire share. If you're not based in the US, if you're based in other countries, in some cases you're not able to go and invest in these types of products, but you can go and invest in the stock exchange in Frankfurt, where Nintendo also trades their shares. So why Nintendo? Nintendo make game consoles, games, and various kinds of merchandise surrounding these games, but they don't do the same thing as their competition in that they target the casual gamer. They target the families, they target the person who's not very serious about it, they target people who just want to have a bit of fun for a short period of time, rather than people who are pro gamers who want the best possible graphics and the most complicated kind of games out there. Think things like Donkey Kong, Mario, and various other games like Pokemon. Nintendo have a long history of designing and launching consoles that are really liked by their customers. In September 2005, they went and announced a brand new console called the Nintendo Wii, and almost immediately their stock price exploded. It went from $13 to $28 in November 2006 when it was launched, and then all the way to $76 just 12 months later. But the Wii suffered from having poor graphics, very poor connectivity, and a lack of titles compared to their Xbox and PlayStation rivals. So as the hype around the Wii went down, as the sales went down, the share price went down with it. And the Nintendo 3DS didn't really do very much at all, either for the company's fortunes or for their share price. But then in December 2016, Nintendo announced the Nintendo Switch, and that changed everything. This was a console that kids could equally play in the back seat of their car, but could also go and connect to your TV and run games on the big screen.
This is the Nintendo Switch.
The share price went from $25 all the way to $57 in March 2018, and after a short dip because there was 1 quarter when their sales didn't grow as much as some people expected, they launched the Switch Lite, and together with an ever-increasing number of sales, the share price continued climbing. They have outsold both of their rivals by a long way. They've sold 21 million Switches in the financial year 2020, which is about 50% more than the combined sales of the Xbox and the PlayStation in the same period, which sent their share price soaring all the way to $79. Now, it might seem that it's way too late to join the party, but I strongly disagree. The console market is growing at an incredible rate of over 10% per year over the last few years, and there are rumors circling that sound very similar to the rumors that were circling before the last few releases, that they are about to release a brand new console. This will be an upgraded version of the Switch that will do a lot more in terms of game processing, in terms of graphics, and will enable 4K resolutions as well. And I think this might take them a long way towards increasing their sales and taking an even bigger share of the market. Apparently this announcement is going to be coming relatively soon at some point during the course of this year. And the one thing that I think they have learned is that they shouldn't have a long hiatus like the one they had after the release of the initial Wii. I think the company has learned their lesson and they are releasing a new console at just about the right time to go and take them up on the next growth trajectory, and I want to be part of that growth trajectory, which is why I am invested in them as it stands. Next on my list is Pinterest, and Pinterest are absolutely unique. They are the third biggest search engine in the world. Think about it for a second. The third biggest search engine in the world, and they're also a top 10 social media app, which is an incredible combination in one package. They've been growing massively, adding almost 40% to their user base during 2020 with a total of 442 million customers in Q3 2020, of which 98 million, this is a huge number, 98 million are based in the US. Pinterest continues to be loss-making, but their revenues are ramping up fast. They went from 756 million in 2018 to 1.14 billion in 2019 to 442 million just in Q3 2020, with an estimate of 2.3 billion in total revenue for 2020, which is a mighty high number and an amazing growth rate. The company made a net loss of 1.4 billion in 2019, but in Q3 2020, their net loss was just $94 million. I think the change in that is insane, and despite them still technically being loss-making, I can see them turning a profit as early as 2021, and from the point when they're turning a profit, I think the sky's the limit as to how far that company can go. The best thing about Pinterest is the massive uniqueness of their proposition. This product is unlike something else. It isn't similar to Google. It isn't similar to Facebook. They're doing something really unique that seems to be working incredibly well for their users. But not only that, they have a few massive competitive advantages. Their search is incredibly visual. Everything's based on video or photos, everything's based on pins. I really like that. Their social media content is not restricted like other social media platforms in that it's not restricted to just content posted on the social media. It enables you to post anything from the entire internet in the same pins. Next, they have a high penetration into high net worth segments, including their very large marketing base in the US. And although their share price has already exploded in 2020, I still think this is just the beginning of their journey. I personally have made about 140% return on them during the course of last year, but I'm holding them and continuing to invest more. Their market cap at the moment is $44 billion, but I can see this company turning things around really fast, and I personally think that their profits may well reach 10 billion and more over the coming years. I am super interested and I am going to be staying on that train. Next on my list is Twilio. Twilio is an API-based tech company that provides businesses with ways of communicating with their customers in a really easy and very scalable way. From email to text to voice, there is an unlimited number of ways that you can go and communicate, send messages and servicing and all kinds of other communications to customers. And Twilio is quite unique in more ways than just that. Alongside their natural organic growth, the company's been acquiring companies really well over the last few years. The two most astute ones, in my opinion, are SendGrid in 2018, a company that I personally use that provides an email API service for businesses to use to go and send emails out, receive emails, and do all kinds of marketing stuff with it. And Segment in October 2020. This is a market-leading customer data platform that links to all kinds of different platforms and new tech and enables a lot of really cool stuff that companies can do both with existing customers and prospects. As more and more industries and businesses continue moving more of their services and communication online, as more startups begin launching to disrupt those industries with fully online propositions, I see Twilio as being the company that is at the bottom of the mountain selling picks to those going up the mountain to search for gold. And the company that sells the picks is the one that I want to invest in. Their stock has risen 265% during 2020, but I still think there's a long way to go. The reported revenue rising by 50% in Q3 2020, and it seems that although they are loss-making, they are pouring every single dollar that is coming into the business back into R&D. And so I am very excited about where this company may be going, and I want to be part of that journey, and that's why I'm invested. Next on my list is Square. Over the last year, they have gone bananas bananas. What a year it's been. Their share price has grown 250% during the year of 2020, and I think it can grow a hell of a lot more than that. They provide a range of payment-related services both to businesses and consumers. Businesses can go and use merchant services and payment processing services, and customers have access to the Cash App where they can do anything from sending money to someone to investing. Now, a lot of people get really excited about that Cash App. It accounts for about a quarter of the business's revenues as of the latest available data to the end of 2019, but I'm more excited about the merchant stuff, which is actually 72% of the company's business. The main reason I'm excited by Square is because although there are some other startups doing some similar things, the big existing competitors, the companies that they're trying to displace, are stuck in a world from about 15 to 20 years ago. I'm talking about things like PayPal, Chase, TSYS, Braintree, also owned by PayPal. These are companies that in many cases haven't adapted with the times. Their pricing structure is antiquated, it is very expensive in some cases, and their platforms are just nowhere near as intuitive, simple to use, or simple to integrate. And given that Square only has a tiny fraction of that overall payment processing market, I think they have a long way to go and many millions of customers that they can go and continue acquiring from all of those people, as well as new businesses starting up and choosing them ahead of their competition over the coming years. And that's why I'm excited by them and why I'm invested. And the best thing, Square is already profitable. They made a net profit of $375 million in 2019 on revenues of $4.7 billion. And even after plowing a whopping $226 million into R&D in just Q3 2020 alone, they still managed to turn a net profit of 36 million. I get really excited by companies like this. And let's move on to number 5 on my list. Number 5 on my list is a company called Shopify. Shopify is an unbelievable company that combines everything that you need to get started with an e-commerce business anywhere in the world. And you can go and get access to pre-made shopping websites, processing payments, integration with various online platforms, including online marketing platforms like Facebook, eBay, and Amazon, and even online marketing. And the fact that you can do all of that for just $29 per month is why Shopify has been growing so much over the past few months. There are premium tiers that enable even more features and things that you can do with the platform, and the company has continuously beaten one earnings estimate after another. Shopify lost $125 million in 2019 on revenues of $1.6 billion, but they did invest $347 million into R&D, and in Q3 2020, their revenue was $767 million. That's almost half of the entire of 2019, and despite continuing to reinvest in their business, the company made a net income of $191 million. The market cap of $145 billion does sound like a lot, but as people around the world are starting their online businesses, as smaller businesses are beginning to be able to compete with larger ones online, and as the companies that have already started with Shopify grow over the next few years, I can see their business exploding. Shopify work with any platform out there, which again is unique. They work with WordPress. They even work with some of their competitors. You can go and install Shopify on Wix. You can go and install it on Squarespace. So I am invested in Shopify for the long term. I don't see anyone even remotely close to competing with them. And that's what gets me most excited. They are continuing to go further and further, and nobody is even 1 or 2 years behind them. And that's why I have an investment in Shopify. I hope you guys found this useful. If you have and you enjoyed it, make sure you go and smash the like button for the YouTube algorithm. It would really help my channel grow and reach more people. Thank you so much for watching. I really appreciate it, and I'll see you guys later.